Okay, let's talk scale. We're looking at an estimated 200 billion in suspicious transactions. I mean, that figure is just, it's hard to even wrap your head around, isn't it? It really challenges our idea of financial scale.
It's staggering, truly.
So today, we're doing a deep dive into what's arguably the largest money laundering scandal in European history, the Danske Bank scandal. Our mission here is to really unpack how a major, respected Nordic bank ended up becoming this massive channel for illicit funds.
Right.
We want to explore the critical mistakes, the ignored warnings, and crucially, figure out what we can learn from this, colossal failure.
Yeah, the lessons are key.
To understand financial crime better and the efforts to fight it, we've drawn on detailed reports, investigations, and really tried to pull out the core insights for you.
And the story, well, it starts with something that looked pretty normal on the surface, a big acquisition.
Right, the Sampo Bank deal.
Exactly. February 1st, 2007, Danske Bank buys Finnish Sampo Bank for about 4.05 billion.
Standard enough move for a growing bank.
You'd think so. But they didn't just buy a bank. They inherited, well, let's call it a financial time bomb.
Which was?
Sampo Bank's Estonian subsidiary. And this branch, crucially, came with this highly profitable but super risky non-resident portfolio.
Non-resident meaning clients not based in Estonia.
Precisely. Serving customers mainly from Russia, other former Soviet states, going back to the 90s.
Okay.
And this wasn't just, a nice little earner. It was basically an already functioning, pretty sophisticated money laundering setup they just acquired.
Wow. So it wasn't something Danske built, it was something they bought.
They bought it lock, stock, and barrel. And the warning signs, they started almost immediately.
How soon are we talking?
Just 4 months later, June 2007. Russia's central bank sends this letter, incredibly prophetic looking back.
What does it say?
It warned Danske very explicitly that clients of Sampo Bank permanently participate in financial transactions of doubtful origin. Billions of rubles monthly, they said.
Billions.
Monthly. And they pointed out that the goods supposedly being bought never crossed borders. They called it criminal activity in its pure form, including money laundering.
You can't get much clearer than that.
Pretty direct, yeah. Then, later in 2007, Estonia's own financial watchdog, the EFSA, did an inspection.
Found.
Highly critical report found Danske Estonia was only formally following AML rules. Oversight for non-residents. Inadequate.
So ticking boxes, but not actually doing the work?
Kind of looks that way. By September 2007, the EFSA issued a formal order, a precept demanding corrective actions.
Like what?
Get better info on who actually owns the money, the beneficial owners, and where the funds genuinely came from. Basic stuff, really.
So, okay, multiple explicit warnings, internal and external, very early on. What was the reaction back in Copenhagen at Danske HQ? Did they jump on this?
No, far from it. The response seems best described as, willful blindness.
Really? They just ignored it?
Reports suggest senior management were dismissive. One executive apparently argued the Estonian manager had brushed off the EFSA.
Brushed off the regulator?
Yeah. And that because transfers went through a Russian bank, there was, quote, no problem.
Wow. That's quite a level of denial.
It shows a pretty profound disregard for clear, flashing red lights at the very top.
It's hard to fathom, but
Yeah.
Okay, beyond just ignoring things, did they make any active choices that made the situation worse? Allowed it to grow?
Oh, absolutely. Ignoring warnings was bad enough. But maybe the single most catastrophic decision for their operational control happened in August 2008.
Right in the middle of the financial crisis.
Exactly. They decided to abandon plans to integrate the Estonian branch onto the main Danske Bank Group IT platform.
Wait, they stopped the integration. Why?
That's the baffling part, especially since just months earlier, March 2008, they'd successfully integrated the Finnish part of Sampo Bank involving like 2.5 million customer accounts. A complex job they did do.
So they could do it, they just chose not to for Estonia.
Precisely. And this wasn't just some minor IT issue. It effectively isolated the Estonian branch, created a kind of compliance black hole.
Functionally invisible to headquarters.
Pretty much. The consequences were huge and lasted years.
Tell me of those consequences. What did that isolation actually mean day to day?
Well, the Estonian operations just kept running on their old separate systems, completely cut off from Danske's, more sophisticated group tools.
Okay.
All the documents mostly stayed in Estonian and Russian. Big language barrier for Copenhagen.
Right.
And crucially, things like anti-money laundering checks, KYC, know your customer transaction monitoring, it all stayed at a really basic rudimentary level, an operational silo.
And I guess that silo was also a very profitable one. Seems like there was a strong incentive structure keeping it separate.
You've hit the nail on the head. By 2013, this non-resident portfolio was dominant. It held 44% of all non-resident deposits in Estonian banks, up from 27% in 2007.
44%, that's huge market share.
Massive. And here's the kicker. It generated over half the branch's profits.
50%. From this one risky portfolio.
Yep, with minimal capital tied up. So you had this perverse incentive structure.
Yeah,
right?
How so?
Huge transaction volumes, very little due diligence checking who customers are, where money comes from, and not much regulatory heat.
The very things that made it profitable were the things that made it perfect for money laundering.
Exactly. We're talking 3, maybe 4,000 active customers doing crazy high transaction volumes. Services offered with minimal questions asked, practically no credit risk for the bank.
It sounds like a recipe for disaster, deliberately ignored because it was making so much money. Was it truly designed to overlook compliance, or just a profit focus where risk became invisible?
That's the million-euro question, isn't it? Intent is hard to prove. But the evidence definitely points to this powerful internal drive to keep that non-resident money flowing, even as alarms got louder.
And they did get louder.
Oh, yeah. Between 2010 and 2013, problems mounted, more critical reports from EFSA in 2012. Estonian and Danish regulators started talking directly.
Okay, pressure building.
Then a really big development in 2013. A major correspondent bank, one of those banks, essential for moving money international, especially dollars, decided to stop clearing dollar transactions for Danske Estonia.
Why?
Explicitly because of money laundering concerns. That's not just a slap on the wrist. That's a serious signal from the global financial system.
That's a huge red flag.
Huge. And internally, you had Thomas Borgen, who was head of international banking then, later became a CEO. He was actively pushing to increase the non-resident business.
Even then, against these warnings.
Yes, even when members of the bank's own executive board had serious reservations, he was advocating for growth in that specific portfolio.
So alarms ringing everywhere, externally, internally, yet the bank, or at least key figures, kept digging in. Who finally blew the whistle loud enough to be heard?
That really brings us to 2014 and the courage of one individual, Howard Wilkinson.
The whistleblower.
Whistleblower. He was a British trader working in the Estonian branch. He started digging internally around December 2013 after spotting weird irregularities.
What did he find?
Wilkinson was methodical. He started with one company, Lantana Trade LLP. Looked dormant in UK records, right? But it was pumping huge volumes through Danske Estonia, and when he got hold of its amended accounts, he found they were false.
Falsified accounts.
Yep. And he didn't stop there. Between January and April 2014, he sent 4 detailed whistleblowing reports straight to senior execs in Copenhagen.
4 reports. What did they say?
The first one's title says it all. Whistleblowing disclosure, knowingly dealing with criminals in Estonia branch.
Chilling. He didn't mince words.
Not at all. He eventually uncovered 16 large customers, all using false accounts. 15 of them shared the same registered address in the UK.
15 companies at one address. That screams shell company.
Classic red flag. So Wilkinson lays all this out for management. What was the bank's response this time?
Did they finally act? Please tell me they finally acted.
They did, internal audits. But Wilkinson felt strongly that group management had no intention of taking the urgent action needed.
So more internal reviews, but no real clampdown.
Seems that way. So Wilkinson, feeling ethically bound, resigned in April 2014. And he told them, if you don't act, I'm going to the authorities.
Okay, so he puts them on notice. Did that finally force a proper cleanup, maybe looking back at past transactions?
Not really, not properly. The actual closure of that non-resident portfolio was, well, slow and reluctant, grudging.
Still trying to hold on to it?
Initially, yeah. In 2015, plans were apparently still to keep most of the customers.
Unbelievable. What finally forced their hand then?
2 things, really, happened in July 2015. One, the Estonian regulator, EFSA, imposed formal sanctions.
Okay, that's serious.
And 2, the critical blow. Their remaining US dollar clearing banks terminated the relationships.
Cut off from the dollar system. That had to hurt.
That basically crippled the business. But even then, even as they were closing it down through late 2015 into early 2016, they failed to go back and properly examine past transactions, past customer relationships for suspicious activity.
They didn't look back at the potentially laundered money.
Not systematically. They only decided to do a proper historical investigation in autumn 2017, nearly 2 years after being forced to shut it down. A huge gap.
Wow. That failure to look back seems crucial. So how did this whole mess, the 200 billion figure, finally explode into public view?
It started breaking in March 2017. The Danish newspaper Berlingske began publishing a series of investigative reports.
The media got onto it.
Exactly. But the full, just jaw-dropping scale wasn't revealed until September 19th, 2018.
What happened then?
That's when the bank's own commission report, the Brun and Gentle report, came out, and it detailed the 200 billion in suspicious flows through Estonia.
200 billion euros. Confirmed.
Confirmed in their own report. The fallout was instant. CEO Thomas Borgen and the chairman Ole Andersen resigned that same day.
Rightfully so, it sounds like.
Borgen's statement was telling. Even though I was personally cleared from a legal point of view, I hold the ultimate responsibility.
Taking responsibility after the fact.
And then also in September 2018, Howard Wilkinson's identity was leaked.
The whistleblower.
Yeah. Which led to him testifying before the European and Danish parliaments later that year, using that famous analogy.
The smoke detector analogy.
That's the one. Saying he was just the smoke detector going off, but the fire department, the bank's management, didn't respond properly.
A powerful image. And the legal hammer eventually fell, I assume.
Oh, it fell hard. Criminal charges came thick and fast. In Denmark, May 2019, charges against Borgen and 9 other senior managers.
Okay.
In Estonia, April 2023, charges against 6 former branch employees related to about $1.6 billion specifically.
But the really big one was the global settlement, right?
Absolutely. December 2022, a massive $2.059 billion global settlement with authorities in the U.S. and Denmark.
$2 billion. And what was remarkable about how the U.S. approached that legally?
Yeah, this is fascinating from a legal standpoint. The U.S. Department of Justice didn't primarily rely on proving direct AML violations for all that money, which is incredibly complex, right? Proving each transaction was dirty.
Right, that seems almost impossible at that scale.
Instead, their core legal theory was bank fraud.
Bank fraud. How?
They argued Danske Bank committed fraud by deceiving its U.S. correspondent banks, the banks like Bank of America, JP Morgan, Deutsche Bank, that were processing the dollar transactions.
Deceiving them about what?
About the state of its Estonian operations, its customer base, its weak compliance controls, essentially lying to them to keep access to the U.S. financial system.
Ah, so the crime was lying to the U.S. banks, which enabled the suspicious flows.
Exactly. That deception allowed roughly $160 billion to pass through the U.S. system via those correspondent banks. It's a more direct offense to prove than the underlying laundering itself. Clever, really.
Very clever. And that massive penalty, coupled with the sheer scale of the scandal, it must have sent shockwaves through European regulators. What was the EU's response?
It was a watershed moment. This scandal was the catalyst for the biggest overhaul of EU anti-money laundering rules ever seen.
So concrete changes followed.
Definitely. First, they strengthened the existing 4th AML directive that was already adopted in 2015, but they beefed it up because of Danske.
How so?
Stronger rules on finding the ultimate beneficial owner, the UBO, the real person behind a company. They expanded the scope to pooled and gambling, posh deals over 10K.
Closing loopholes.
Trying to. Then came the 5th AML directive, adopted in 2018, much more a direct response.
What did that add?
Big things. It mandated public registers of UBOs by March 2020 transparency. It brought crypto exchanges and wallet providers under AML rules for the first time.
Ah, tackling the crypto angle.
Yep. Lowered limits on prepaid cards, brought in art dealers, auction houses, high-value goods traders, casting a much wider net.
That sounds like a serious tightening of the screws. But given how systemic the Danske failure was, crossing borders, involving different regulators, did the EU feel that was enough, or did they go further?
They realized they needed something more fundamental, which led to the really revolutionary step, the 2024 AML package.
Revolutionary.
It's a fundamental shift. Moving from a system of national AML rules and enforcement to a truly supranational European approach.
Wow, how does that work?
The key element is the new Anti-Money Laundering Authority, AMLA. It's set to be up and running from July 2025, based in Frankfurt.
A new EU agency just for AML.
Exactly. And AMLA will directly supervise around 40 of the highest risk financial institutions across the EU starting January 2028.
Directly supervise. Overriding national regulator.
For those specific high-risk entities, yes. And you look at AMLA's criteria, cross-border business, dealings with high-risk countries, past compliance failures. Danske Bank's Estonian branch would absolutely have been caught by that.
So direct EU oversight for the biggest risks. What else does AMLA do?
It gets unprecedented powers to coordinate the National Financial Intelligence Units, the FIUs. Those are the national bodies that handle suspicious transaction reports.
Addressing the communication breakdowns we saw in the Danske case.
Precisely. Trying to make sure information flows properly between countries, which was a massive failure before.
And I heard there's a new single rulebook too, not just a new authority.
Correct. The 2024 package includes the single anti-money laundering rulebook. It's an EU regulation, meaning it applies directly, identically everywhere in the EU.
No more slight differences between national laws for banks to exploit.
That's the goal. And the regulatory arbitrage, where you could sort of pick the jurisdiction with slightly weaker rules. This creates a single high standard.
What kind of practical things are in this rulebook?
Things like a $10,000 limit on cash payments for businesses across the EU. Enhanced crypto rules again, even pulling in sectors like major football clubs and their agents.
Football clubs, wow, they really are casting the net wide.
They're trying to cover all the bases where large sums of money move.
So this unified approach, how does it fix this specific problem? Danske highlighted the poor oversight between the bank's home country, Denmark, and the host country, Estonia.
That's another key focus. The new framework mandates much stronger cooperation between AML authorities and what are called prudential supervisors.
Prudential supervisors, who are they?
They're the regulators focused on a bank's overall financial health and stability, solvency distinct from the AML cops, if you like. Now they have to work together much more closely.
Okay, breaking down silos between regulators too.
Exactly. There's stronger cross-border information sharing, including real-time sharing of suspicious transaction reports, or STRs. The European Banking Authority, the EBA, gets beefed up powers as well.
And real-time monitoring across borders.
Crucially, yes. New requirements for banks to have real-time transaction monitoring that can actually see across national borders within their group, directly tackling the kind of isolated system that let Danske Estonia run wild.
Okay, this sounds like a seismic shift for European banking. What's the actual impact on the ground right now for the finance industry in 2024-2025, especially costs?
We are seeing a compliance cost revolution, honestly. AML compliance spending is now one of the single biggest operational costs for major banks.
Can you put numbers on that?
Globally, the estimate is around $275 billion a year for European institutions specifically, about $114 billion. Just look at the UK. They spent nearly £38 billion on AML compliance in 2023. That's up 32%. Just since 2021.
That's staggering growth.
It is. And Danske Bank itself, they introduced a $500 annual fee for corporate clients this year, 2024, specifically to cover enhanced AML checks. It's caused customer complaints, legal challenges.
So banks are passing the cost on. What's driving these huge costs?
It's several things. Much tougher customer due diligence, really digging into who customers are. Deep dives into finding the ultimate beneficial owners that can cause thousands of euros per complex customer.
Right.
And completely overhauling transaction monitoring systems, bringing in AI, machine learning. But even then, a lot of alerts, maybe 95%, are still false positives needing human review. So tech costs and people costs.
It sounds like an enormous burden. Is there any upside? Has this pressure forced banks to innovate, maybe get smarter about fighting financial crime?
Absolutely. That's the sort of paradoxical silver lining. This scandal and the resulting pressure has massively accelerated the adoption of advanced technology in AML.
Like the AI and machine learning you mentioned.
Exactly. So-called smart AML software is helping some banks cut costs by up to 60% by being better at filtering out those false alarms.
Okay, so tech is helping manage the cost burden eventually.
To some extent. And ironically, Danske Bank itself has become something of a leader here. They've invested huge amounts in new AI systems and are reportedly seeing similar big reductions in false positives.
From scandal to tech leader.
In this specific area, yeah. AI and machine learning for real-time data analysis is pretty much standard practice now across major EU banks. It's a significant tech leap forward born from a major failure.
And what about the regional impact? Especially in the Baltics, where this started. How has Estonian banking changed?
Oh, it's been a profound transformation there. Non-resident banking, it's become incredibly difficult across all the Baltic states.
Harder to open accounts?
Much harder. Policies are way stricter. For many legitimate international businesses, it's become practically impossible now.
Even affecting things like Estonia's e-residency program.
Yes. That program attracted lots of international entrepreneurs, but most traditional Estonian banks now refuse to offer services to non-resident e-residents.
Wow. So opening a non-resident account in Estonia now involves.
You generally need a physical presence, very detailed disclosures about your business, and you have to demonstrate a real economic connection to Estonia. The door has been shut pretty firmly.
And beyond Estonia.
The broader impact is huge, too. International correspondent banking relationships everywhere are under much tighter scrutiny. And there's reputational damage that's kind of spread to entire national banking sectors, like other Nordic banks faced increased scrutiny for a while.
So these high costs, the tech demands, the reputational issues, it must be changing who wins and loses in European banking, shifting the competitive landscape.
Definitely. Those massive compliance costs, they're a huge barrier to entry for smaller banks or fintechs. It really favors the big established players who have the capital to invest.
Driving consolidation. Fewer, bigger banks.
We're seeing trends in that direction, yeah. Market consolidation is happening, and the competitive edge is increasingly shifting.
Towards who?
Towards the institutions that can demonstrate they have really robust, technologically advanced anti-money laundering systems and processes. Compliance isn't just a regulatory burden anymore, it's becoming a competitive differentiator. If you can do it well and efficiently, you have an advantage.
It's clear the Danske Bank scandal has utterly reshaped European finance. New regulations, new authorities, new ways of operating, a whole new paradigm for compliance.
Absolutely. A complete sea change.
But it's not like all the problems are solved, right? Yeah. There are still challenges. We saw Danske Bank recently had major issues with its debt collection systems, affecting over 100,000 customers due to data problems.
Right. Data quality remains a huge underlying issue for banks.
And customer trust. That takes a long time to rebuild after something like this. Plus, there's that constant balancing act for banks, isn't there? Fighting crime effectively versus providing smooth, efficient service to legitimate customers.
That tension is always there. Making checks to hard drives, away good business, making them too easy lets the criminals in.
Looking ahead then, AMLA coming fully online, continued pressure for standardization, the cost pressures, the tech race. It seems the landscape will keep evolving rapidly.
No doubt about it. The pressure isn't letting up.
This whole scandal really serves as a stark reminder, doesn't it? That even in industries we think of as highly regulated, the drive for profit can create enormous blind spots.
The incentives can skew behavior dramatically.
And technology. It's crucial for the solution now, but it also brings its own complexities and potential pitfalls.
True. It's not a magic bullet.
So maybe a final thought for you, our listener. As our financial world gets ever more connected, more digital, faster, how can we as consumers, as professionals, get better at spotting those subtle signs, the little indicators that maybe something isn't quite right under the surface?
Yeah, what really builds trust in a financial institution today, especially when so much happens unseen through complex international structures and digital flows, it's a critical question.